From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 29th, 2018. I hope you had a great weekend and are ready to get started trading this week. Today we're going to be taking a look at the AUDUSD, the Australian versus the US dollar, for today's trade analysis. As we could see over the past several months, actually going into the middle of last year, July and August, we've had two different trends. We had the blue trend line where the market fell from the green zone at the top of the chart, 8120, 8100, all the way down here to 7500, the pink shaded area, bottom of the black trend line. Then it reversed and started going back up. Since November and December, we've seen the uptrend pressuring back up, and by the way, we're reaching right back into that same historical resistance, the green shaded area, 8100. So very interesting since the middle of last year. A significant fall and then a complete retracement back to the same resistance high. So the question, of course, is, are we going to see the market reverse again and pressure back down like it did the last time we were here, blue circle, top of the blue trend line? Or is it going to break through here finally and continue the uptrend? We haven't gotten that answer quite yet here for the Australian dollar. Currently, the trend is up, so we want to pay attention to that. We want to make note of the uptrend and probably look for opportunities in that direction, but we want to be watchful also for clues and evidence of resistance and reversal up here at the top of the trend. Let's go ahead and zoom it in a couple of times. Again, we've been studying the pattern within the uptrend where you have this blue box where the market went into congestion, found support at the yellow zone, eventually breaking it and going higher. Then it went into this black box here between the pink and the blue zone, and it fell down, found support, broke out, and went higher. So obviously the pattern of the trend tells us that if we're going to buy it, it would be much more logical to buy it closer to the blue zone, bottom of the black box, and the bottom or down closer towards the trend line. That would be down into the low 8,000s, 8,030, 8,010 is the blue shaded area. Given what happened in these previous two boxes, that makes a whole lot of sense, buying on a dip into support. The next reason we would look to buy in the direction of the trend, of course, would be it finally is able to get above 8120, the green zone, and go higher. The past 3 days, Thursday, Friday, and now Monday, unable to break through there. So we don't really want to buy as long as it's under that green zone, because history tells us that this is a potential resistance and potential reversal area for the Australian dollar. Otherwise, we could be looking for opportunities for resistance and reversal here from this same area. So again, we know where the decision zones are. It's historically accurate. It's factual. We don't really have to look too hard. We just have to watch for the opportunity to arise, either the breakout above the green zone, reversal from the green zone, or at least a dip back down to the blue zone for the long shot in the direction of the trend. Let's take it down to the 4-hour time frame. Again, it doesn't give us a whole lot of confidence yet here. We do see a little bit of a spike higher late on Friday and then opening a little bit lower. So at least at this point today looks more bearish than bullish. It looks like the buyers have been held at bay. The sellers have been able to squash all the buying pressure that happened late last week, and so far it looks more likely that today this will be resistance. Barring any significant surprises in the market, I would say as long as it's under that green zone, you don't really look to go long and buy today. Maybe an intraday opportunity to go short underneath the 8100 level, targeting minimum back down here to the blue zone. Of course, if it ever breaks the black trend line in the blue shaded area, we'd look for further movement lower. But at least at this point, selling the green zone, targeting the blue zone, looks like an intraday opportunity. The risk, of course, and stop loss would be above probably Friday's high, but above the green zone at minimum. That way, if it does decide to go bullish again, you can get out with a minimal loss. But at least at this point, don't buy it until it either falls to the blue zone, breaks above the green zone. Opportunities to go short on an intraday basis here for the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.